what I would like to do is, if Andrew, introduce Andrew J. So the Executive Director and Head of Data Centers for CBRE is going to talk about the market landscape and his and CBRE's perspective on that. So thank you, guys.
Thank you, Greg. So I've been asked, and thank you for asking me to come and talk to you today about hot markets and key market dynamics in the co-location market. Again, tinged with a bit of nervousness because I know that there are a lot of operators in the audience today. And so it always worries me, particularly if I'm going to push out there and talk about specific operators and what they're doing and some of their characteristics, good and bad, that I'm going to get someone in the audience who's not very keen. But anyway, we'll see how we go. And the clicker doesn't seem to have done. Here we go. So I've been asked to look at this globally, even though we're in London. This is very much a global, international group. So I'm going to look at the biggest markets. I'm just going to stick a slide up with, these are the big 4 markets and the main continents, and look at some of the sizes. And particularly, I think the key there is the relativities of the different sizes. Emerging markets, really interesting when we looked at emerging markets. I'll save that for a second, but we struggled with the US. Asia was easy, it's kind of obvious, but actually trying to make the US emerging markets was quite interesting. Our researcher anyway had a good time with that. We couldn't stand here and not talk about hyperscale cloud providers. They are moving the entire world for us at the moment. Our lives totally revolve around them, and so you know, just a slide or two on those guys. Emerging co-location companies, whole companies have emerged just to satisfy the hyperscale demand. And so I think they're worthy of mentioning. And I've chosen, again, just 3 different companies just to give a different flavour of what they're doing. And then I heard a comment earlier, recently, from someone who knows the market reasonably well. He just said, well, it's all the same, all this colo stuff, it's all vanilla. And so I take some offence at that, really, because I think that's wrong. There's a lot of differentiation, so I'm particularly going to just touch on that at the end. And I think we've got half an hour. Is there time, Greg, for some questions at the end?
Yeah.
Brilliant. Delighted to do Q&A, and I think I've been asked to stay for lunch, so if people have any questions, delighted to talk to them. So the global markets, if we're going in the right direction. Oh, have I got this thing upside down? I could have been doing the M&A translate the M&A one in a minute if I tried hard enough, kept clicking. Here we are. So come on. These are megawatts, the big markets. 1,900 North America, their biggest 4 markets. 1,000 megawatts. This is of co-location space, wholesale and retail. About 800 in Asia Pacific. Not unsurprising. I think the interesting thing for me is Europe and Asia Pac. That's it. That's the 100 megawatt plus markets. You then fall off a cliff below that. Again, if Gary was here, I'd be talking about Dublin. And I've got to check my notes here because I always worry I'm going to get the number wrong, 70 megawatts in Dublin. Then you go down to, let's say, I don't know, Zurich. It's like 45. So it goes down very, very quickly after this Paris-type size. But look at North America. So after Silicon Valley, they've got, well, there's certainly 4 markets that we track from a kilowatt basis. So you've got Phoenix, 264. So actually it ties with Silicon Valley, but we can only put 4 up there. Chicago, 249. Atlanta, 183. Seattle, 167. They're the ones we track. And so you've got a hell of a lot more below that. But even if those ones that we track, you add it all up together, you get to 2,700 megawatts just in North America. And so that is the market. So we often look at North America, see what's happening there, because it's going to happen, bet your bottom dollar, in Europe within 18 months to 2 years, and then subsequently in Asia Pac. In terms of relativities, I think this is the main point about this, I don't see the relativities changing. I think all of these markets are growing broadly at the same sort of rate, 10 to 20% per annum. So I think they're all just going to get bigger at the same time. The relativities will stay as they are. So I'm going to look at Europe, and I think what sets apart these main markets from the other niche markets is the amount of pan-regional and global players in each of the markets. So we've just taken the colo companies here with facilities in more than one of these locations. And it's not surprising these companies focus on the big markets. But what I find fascinating is the variety of operators that have evolved into today's market. So you've got someone like a Colt. So they separated out network and data center business. Data center business very much focusing on big pre-lets to hyperscale companies. Hugely different to the Colt networking business that we've all grown up with. Digital Realty, biggest wholesaler in the world. But they're trying to become a retailer, aren't they? They've bought Telex, they've bought some divestment properties from Equinix, the Telecity buildings, trying to get that ecosystem going. Then the other end of the spectrum, they've bought DuPont Fabros to get better engaged, to win some of this hyperscale stuff, because they were arguably struggling a little bit in that regard. Equinix as our biggest retailer, my goodness. What aren't they going to buy? Highly acquisitive, and we'll touch on that later. Chinese have bought into Global Switch, 50%. Maybe that'll increase. You know, who's going to buy Interaction? I don't know. If anyone in the audience is from Interaction wants to tell us, that would be great. No, didn't think so. The Singaporeans, very, very active. Keppel, again, they've just bought in Ireland. They've bought in Frankfurt recently. They're going to be buying. The Japanese, I think, really interesting, NTT. So Gyron, eShelter, Raging Wire, Dimension Data. You know, you're going to see more from those guys. So real mix of people. Telehouse, Japanese, but totally different strategy to NTT. They just expand organically, and they're hugely successful, very highly connected locations like Paris and London. And then Zeniam, private equity backed, so Soros. They've got London and Frankfurt, they've got Istanbul. Again, we'll talk about those guys later. Very, very different bunch of people all competing in these core markets. And the investment side, wow. It's just so, it's too much on that slide, isn't there? But it's great. Look at it. We were saying it all going up to the right, depending on which way you're looking at it. And my goodness, it's going up to the right. Very difficult for new companies to get into the market, particularly for retailers. There are very, very high barriers to entry. It's almost a catch-22. How can you tell someone that you're going to be great at building and operating a data center if you've not actually done it before? Really difficult. So that's driving M&A. Difficult to get capital when you haven't got the track record. For retailers particularly, how do you develop an ecosystem? What a lot of people fail to remember is these ecosystems have been evolving since the dot-com boom. That was the late 90s. You know, we're coming up to 20 years now. You don't just build these ecosystems overnight. So it's not surprising we've seen an awful lot of M&A activity. There's also, I think without doubt in my mind, a two-tier market developing between those with and without. So those with massive amounts of low-cost capital and those who don't have the capital. Global Switch's latest bond issue, 1.5% coupon on that thing. That's just extraordinary. Big REITs seem to have a bottomless pit of new low-cost capital, and boy, they're determined to use it. We're seeing now the infrastructure funds come into the market. Again, lower cost of capital, lower return on capital employed expectations. People like Infravia buying Ethics everywhere, buying NGD, Newport. People who have infrastructure, mobile phone masts, Digital Bridge, for example, buying Vantage. Watch out, they're going to buy something else in Europe, I would expect, in the near future. BC Partners and Medina going in with the old Savage CenturyLink business. You know, $2.2 billion they spent on that. So it's big, big money. And wow. You know, we've gone from what we thought was big in 2012, $2.4 billion. In the first half of this year, we've had $18 billion put into M&A. I mean, you can't stand here and overstate the size of what is happening in our market at the moment. It is absolutely incredible. And it's been driven by the availability of capital, but also the huge demand there is for the end users, for the the hyperscale cloud companies. And so that is driving growth. In 2016, we saw a 2x scale take-up. So take-up doubled compared to any other year on record. And we've been tracking the market since it started. Just doubled in 1 year. That's absolutely incredible. And that's all driving strong returns for these guys. So why wouldn't they invest more money? They'd be mad not to. Arguably, the markets aren't particularly crowded. It's still viewed as a little bit of a niche. And so with these barriers to entry, it's stopping people getting in. So again, that's why those that are in quite like to stay in. Not surprising, the markets are becoming more institutionalized. The infrastructure funds coming in is a good example of that as the PE guys start to sell out. And there are other mainstream institutions coming in as well. Absolutely massive, that number 18, you can't even imagine it. So I was asked to talk about emerging markets, and specifically, when I was briefed, I said across the whole world. And so I squirmed a little bit at that, so I thought I'm going to have to cover the US. The US is just so mature. You saw the number of megawatts they've got. They don't really have emerging markets. We've got exciting, pioneering markets in Asia, which we'll touch on in a minute. US has been pretty dull in my book, from an emerging perspective. So our research guys, I asked them to spice up the US slide, and here we go. Minneapolis is what we came up with. Apparently Target, the discount retailer, which I'd never heard of, is the main company in Minneapolis. And Prince was born in Minneapolis. I would hope that very few people knew that. But from a data center perspective, there's been no real wholesale activity there right the way up till 2016. But the past 2 years, they've seen modest growth. So they've seen 6 megawatts a year being taken up in Minneapolis. And whilst that's not a lot, people are talking about it. And there's a bit of push factor going on. So markets like Chicago and Dallas, some of those US central locations are getting quite overheated. And so they are starting to push people to markets like Minneapolis. So that's why that one's up there. North Carolina is similar. Lowe's are a home improvement company. They are the largest company in North Carolina. And if anyone knows who this guy is on the right, I'll be absolutely amazed. So he is the chairman of the World Wrestling Entertaining Federation, and his name's Vince McMahon. That was the most important person, famous person that we could come up with from North Carolina. So the point being, these are pretty small markets, but the data center story is very similar to Minneapolis. Lack of modern colo space. You've got the traditional enterprise guys who are self-building their own data centers. The colo guys are starting to come in. There's some M&A activity, and it's changing the landscape. And in this case, it's got quite close proximity to the Northern Virginia market, which is the biggest market, and also the Atlanta markets. And so proximity to those markets is helping it to grow. So don't just think about those massive markets. Think about some of these emerging ones. Pacific Northwest, I'm delighted to say our research guys found that a bit easier. Seattle, home of Microsoft. Bill was born there. Pacific Northwest covers several different locations. We've got Portland, Oregon, Seattle, Central Washington, and Central Oregon. And so all the big cloud players actually are there, although generally we don't think of it as a data center area. There's a great fiber story connecting it to the Valley and to San Francisco. And again, there's an element of natural spillover, DR type thought process going on from the Bay Area and the Valley. That's it for the US. I think a little bit more exciting is Asia Pac. India's got 1.3 billion people in it, which is a big number. Huge interest from the hyperscalers. Read the press over the last few weeks. They're all talking about it. 18 million people in Mumbai. That's one of their key targets. Chennai is very topical as well with the hyperscalers. Both cities have got strategic fiber, which make them underpin them with the big populations as big growth markets. But there's loads of other Indian cities. I say loads. Somewhere like a Pune, again, a lot of people just never even heard of, rapidly emerging economy, very strategic location in India, and offers diversity to places like Mumbai. So watch this space. South Korea was hot, maybe not quite so hot at the moment, just with the political unrest and Mr. Trump's comments and things. But it's going to continue to increase. You know, South Korea, a lot of people just don't even think about it, but from a data center perspective, there's actually quite a lot of activity there. And then Southeast Asia covers quite a big area, really. So Thailand, Supermap have built a big new facility there, and it exists, and it's the first one, and it's been quite successful. Places like Indonesia has 260 million people in it. Comment there was just from one of the government officials said, look, we're getting really serious about data centers. So government backing, promoting, same with Malaysia. They want to be the alternative to Singapore. Again, this push-pull factor. Singapore getting a bit overheated, not a lot of land, quite expensive. So why not go to Cyberjaya or some of the new areas that the government there are promoting to win business and investment from Singapore. And then on to Europe. I'll drill down a little bit more detail. Milan, colo market was 6 megawatts for years and years. Dot-com boom, Telecity, via Caldera, Internet Exchange, great story. Never did a bloody thing, Milan. I think I went there a few times in the boom, haven't been there then for about 15 years. Within the space of the last 24 months, you've got Data4, Supernap and Aruba all starting big scale campuses. So suddenly we've gone from 6 meg to 30 megawatts of capacity in Milan. That's flipping astonishing. Driven by, guess what? Yes, several deals have been announced in terms of the hyperscale side. I think that's astonishing. Who would have thought it? And I did say, I think when Data4 went there, I said, that's brilliant, very, very, very clever. Supernap went there, I thought, flipping out, that's a bit bold. And then Aruba went there, I thought, they're bonkers. But in actual fact, they have all been fairly successful. They have all done transactions. These are not white elephants. They're building on a modular basis. It's all quite sensible stuff, driven by the strong demand. Madrid, we used to have that as one of our major markets, but it never really matured and showed its full potential. Traditionally, it got up to about 25 megawatts. We had the main providers, Equinix, Interaction, Switch, etc. We've had in the last 12 months 3 new operators asking us to find them sites to build big-scale data centers in Madrid. So a very, very similar situation to what I've just outlined in Milan is starting to happen in Madrid. We've acquired site for one of the guys, hasn't been announced yet, and I would think that probably 1 or 2 others will happen. So watch for announcements in Madrid, both Spanish domiciled enterprise companies who are needing modern data centers, don't want to build them themselves, looking at colo, and then obviously the hyperscale stuff as well. Next is the Nordics. A small colo market, probably up to 40 megawatts total if you add all of them together. Again, research guys included Iceland in this, which apparently the swear blind is part of the Nordics. I think that's right. But not a lot of, considering it's 4 countries, not a lot of colo really, 40 meg. Some pan-European providers, Interaction, Equinix, etc. People like Digiplex, well established there right from the dot-com boom. But the story here in terms of emerging is obviously the hyperscale guys. Google, Facebook, Apple, look at the size of those facilities. Cold climate, cheap power, green power. And these are the drivers for these hyperscalers who can be, in some cases, footloose and fancy-free. So where should we go? And they're going to be attracted by those types of drivers. Perhaps corporate tax might attract them to different locations. And Apple and Facebook are enjoying it so much, they've announced recently in Denmark they're going to build new facilities, brand new facilities on top of the existing. So quite a lot happening in the Nordics, but not particularly from a colo perspective. And then my last one, bit of an outlier, but Istanbul. I think it really is emerging. Turkey's got 80 million people as a population. It's viewed as a gateway to the east. It's got political issues at the moment, but the hyperscalers are starting to talk about Turkey. There's a view of 58% internet penetration. That's got to go in only one direction, and there's a lot of people. And so the fundamentals there are quite good. And for years, there were no colos there, really. It was Turkcell. Equinix went into a joint venture with they bought, I think, a managed service company. Telehouse went into a partnership with somebody, but no one was there at any scale. Zeniam, this is part of this new world, came in, built a massive, great big data center. Guess what? Equinix have just bought it from them. So it's a great story. So I think watch for more announcements in terms of take-up and expansion in Istanbul. Right, the hyperscale cloud providers, and let me just say, if I knew what they were doing, frankly, I would not be stood here today talking to you lot. I'd be out just making an awful lot of money and having a lot of fun. So we're all double guessing here, aren't we? And I'm certainly not going to stand up here and betray any confidences, or I would be out of a job pretty quickly. But there's some interesting stuff that you can find through doing Google searches. I mean, this is actually quite a good slide. It shows where all these guys are located today. And what I found interesting about this is they're quite densely packed. They're mirroring each other's locations. They're doing that low-hanging fruit bit, to use the great Americanism. They're going to the big cities where there's lots and lots of customers. They want to get first mover advantage, so they're going to those locations as quickly as they possibly can. And they've ended up getting a lot of dots on the map quite quickly. But what I'd like to do is give Hyperscale some sort of a benchmark, a baseline. And if you think that London's the biggest European colo market, we've got 433 megawatts of colo in London. And even that represents 43% of our main 4 markets in Europe. So 433 megawatts. Amazon have got 1,000 megawatts in North Virginia. So in one market, one company, Amazon, have got 1,000 megawatts, which is a multiple of the size of the whole of the London colo market. I mean, I think that's incredible. They talk about server numbers, and Amazon published some stuff last year saying they've got 1.3 million servers globally, and that's going to be a multiple of that today. And I think if you think that's interesting, then for me, look at the white space on that map. Look at Africa. Look at the Middle East. Not a dot. Very few dots just in Sao Paulo, really, on South America. So for me, that's the next part of the growth story. It's how we're going to penetrate those areas. And looking through the audience, I've seen 1 or 2 people who are, Martin, very involved in that area. So I think there are lots of questions. How big are they going to get? How voracious will these appetites be? Where will they go next? But also, I think, how are they going to procure space, which I'll touch on in a second. But in terms of the percentage, CAGR, etc., of their growth, again, we found some good snippets that we've used, which are fairly up to date. But I think there's damn lies, there's statistics, as the expression goes, around numbers and growth numbers particularly, but they are compelling. I mean, Microsoft just last week said they were going to triple the amount of space they've got in China by 1919, which is pretty aggressive. Global data center IP traffic has a CAGR forecast of 25%. If you look at cloud traffic growth by region, the three global regions would be between 31 and 41%. So however you look, whatever metrics you pluck out of the air, very, very strong CAGR indeed. And with these growth rates on IP traffic, it's no surprise that we've seen the colocation companies grow, again, very, very aggressively. So in the last 12 months, we've seen a 20% increase in the colocation capacity in Europe, and that's been mirrored certainly in Asia, and I think the US has probably just been a shade less than that. So where's it all going from a procurement perspective, have we still got this correlation between lots of cloud growth and lots of colocation demand? So will the hyperscalers self-build, or will they use colo and build to suit? And I think with the exception of the edge question, this is the one that most people are posing to me at the moment. And lots of attributes of the colo and build to suit. So across Europe, the cloud companies, I mean, they're just loving it. They're loving the fact that they can deploy in relatively small sizes. They can do it quickly because there's provisioned sites and buildings there ready. They've got quite a few options, so they're not going to a market and being pushed into one particular provider, so they can play one off against another, and this, again, the provisioned sites, having lots and lots of them, is allowing them to drive rentals down really low because of the amount of competition. And of course, they can do this for OPEX and not use their hard-earned CAPEX, which certainly if you look at Wall Street, they've been encouraged to spend that capital on developing new IT products rather than on core infrastructure like data centers. So I think, will this unique set of circumstances continue? If it does, colo is going to continue to have all its Christmases at once. But be careful. Really, really careful. Self-build, you know, what I'm hearing in the market, talking to people, is we started off where the hyperscalers were building their own sites. We probably all know where they are. They've then gone to colo. The tide may be starting to change, and they might start to look at big campuses, but proper big campuses, you know, 100 megawatt plus type campuses. At DCD yesterday, Microsoft were very much pushing that message, which again could be absolutely game changing because they're going to need someone to build these things. But the rules of the game will have changed slightly from this tactical colo that they're taking at the moment. So absolutely fascinating at the moment. I said I'd talk about emerging colo companies. So I've picked just 3, which I think just show the different flavors that we're seeing. People like EdgeConneX, competing with, now well, all these guys are competing with the mature pan-European and global companies, I think. They are pioneering going into new markets, but they're also competing on the established markets. Their differentiator is being able to move quickly and in partnership with the customers. Now, in partnership with the customers, it might sound like a bit old school of a comment, but you would be amazed at how many hyperscalers are saying to us, our old providers just don't quite get what we want. They want us to do it their way. Well, people should be doing it our way. And again, that is allowing these new companies to compete. And in the case of, well, all these, they've won business from the big boys. A risk for these companies, I think it's a big risk, is they are going for it. They're deploying new data centers very, very quickly, very aggressively. But if they get it wrong, if they miss those targets, then that honeymoon period might disappear quite quickly. Quickly on each of these, Edge, gosh, it was founded in 2009, but they've built the best part of 26 facilities in the US, and they've done 4 that's on public record in Europe in the past 4 years. So they've done a hell of a lot in the last few years. They're building specifically for cloud and IT infrastructure companies. They build to the cloud company's specification, to their price point. They don't speculatively build. They're very, very targeted in what they do. And in Amsterdam last year, they won what was Europe's largest single co-location transaction. They won that in Amsterdam, which is one of our most mature markets, which I think, again, is just off the charts. ETIC's everywhere. They're not actually everywhere, but gosh, Casablanca in Senegal in Africa. I mean, they are in lots of different places. But the great examples, they tend to build small, they tend to build in partnership with people, they do those markets where there's very little competition, but they're highly agile, they're young, they're innovative, they're driving new products into the data center, and a lot of people absolutely love them. It's no surprise that Infravia, the Infra fund, purchased them quite recently. And then Zeniam, these are the guys who have done it before in a different guise. They had a company called Centrum in London, got bought by Digital, and guess what? Roll it out again, get some capital from Soros, expensive PE money, and they've built up in Istanbul, which they've now sold, and Frankfurt and London, where they've been very successful, and they've won deals with all of the big guys. Colo model evolution. I think this is my final section. I think we're doing just about okay on time. So yeah, hearing this comment that it's all vanilla, plain vanilla, this colo stuff. There's no differentiation between the providers. Business models have all merged. They're offering wholesale and retail. Specifications are all the same. God, I'd be out of a job if that was the case. I think the biggest differentiator for me on colocation is the ecosystem. I think there's no question about it, and it's becoming more and more important. So I want to just touch on ecosystems for a minute. There's a lot of different ecosystems, and they have all evolved to create, I think, quite fundamental differentiators between different facilities. And I think anybody thinking it's vanilla just isn't looking beyond just the outside of the buildings. But you've got things like Docklands. Okay, the first is IP, Internet Exchange, telco, that whole world with Telehouse, Telecity Global Switch, very well known. I mean, Equinix created a whole market around Slough out of getting the market matching engines into LD5, created a financial services ecosystem, phenomenally successful. Financial services, to a lesser extent, Interaction in the city. Even Virtus, what was the Infinity building in Slough, they got Janet in then. Suddenly you got all the universities going in there. Not massive stuff, but it's an ecosystem. It's creating some premium pricing. It's pulling people into the facility. It's really, really important. The Arc building down at Farnborough, one or two people said it was a bit far out. They got the G Cloud in there, and suddenly people who want to sell services to the government, of which there's a lot, they want to directly connect. They've got to go down there, so it's really successful. Within 2 years, Farnborough will be full, in my view. It's a real success story. I think there is another big differentiator, and that's around business model. And so there is this comment that wholesale and retail's all just come together. And on the face of it, they have, because they're all chasing, to some extent, each other's business. But it's not, I don't think it's easy, and it's not a free-for-all. I think the retailers will tell you, if you get a drink in them, that they actually won't do big wholesale deals unless it's to a strategic customer. So someone like a cloud company is going to then be an on-off ramp and bring the enterprise guys in. So they're not actually competing head-on for a lot of the wholesale business, but that niche hyperscale business, albeit that's big. The wholesalers are competing for retail business, but on the small scale, they're not being successful. They don't have the ecosystems, the wholesalers. They're not going to attract the IP guys and the telco guys into some of their facilities where they've just got space and power. And so the idea that they're all competing, I think, is just wrong. So I think the reality is that actually there's a very good differentiation, and you do get the difference between wholesale and retail. And so I think my final slide is just to say, I think specifications now actually are very similar, and they are less differentiated on specification, which used to be the big issue. But now, actually, with ecosystems and business models, they're very, very different. So I think colo is anything but vanilla. Thank you.
Thank you.